Welcome everyone. This is the weekly outlook with Stefanos and I. As always, we're going to go through the fundamental analysis first, and then we'll jump into the technical analysis with our technical expert, Stefanos.
What's going on, guys? Hope everyone had a great weekend. Let's get into the charts. Let's do a little recap, see what's going on for the upcoming week, and let's get some pips this week.
Yeah, and one thing before we do get started, because I got this question a lot last week, is when we do the weekly outlook, this isn't about whatever already happened. This is what we're telling you is going to happen according to our analysis. So these are actual trades that you can be a part of, whether it's higher time frame coming down to lower time frame, but it's up to you how you manage your entries, how you manage your risk management, and all of that. We're giving you all the fundamental analysis. We're telling you exactly what's coming up, what sessions to mostly trade or be, cautious of. And then from the technical side, Stefanos is breaking down every single level. And so what you should really be doing to take the best advantage of this weekly outlook is kind of do your own analysis first, come back and take a look at our analysis and see, what levels match up, what levels don't match up. And then if you have any questions like, hey, I have this level, but it doesn't match up with yours, or why did you put yours here? That's when you message us, or you could just leave a comment below asking the question, and then we'll get back to it. So that was one of the questions I received. So I thought it'd be helpful if I just kind of do like this disclaimer in the beginning.
We're leading the horse to the water.
Yeah. It's up to you to drink or not.
Exactly. Let's see if you drink it.
All right, so we don't have much coming out from a macro fundamental perspective. There's a lot of economic data coming out, so we'll get into that. But this week, the more important fundamentals that were coming out was whether or not England is going to lift their restrictions for July 19th. So today is July 12th. They were looking towards today to confirm whether or not they're going to lift restrictions, and it seems like they are going to do that. They were looking at the data so far, whether or not the Delta variant cases are increasing. So we have two documents here, two articles here, and in both of them, they state that the cases are increasing, but England is still set to drop their restrictions. Leading up to today's fundamentals, what we've been seeing from PM Johnson is that when they open up the businesses, there will be no restrictions on the capacity. And they're also saying that people don't have to socially distance anymore. People don't have to wear their mask, but now they're recommending it because the cases are increasing. But we'll see it in another article here too in a little bit of more detail. But the medical officials, they're saying that regardless of whether you keep the lockdown or not, it's not going to really make an effect onto the rising cases for the Delta variant. So they're saying like, you know what, go ahead and we're, open up the economy, but we're still a little skeptical about it. But you just shutting it down or extending your restrictions isn't really going to have much of an effect on people who are getting affected. Obviously, the cases will be increasing. People will be going out more. They're not going to be social distancing as much as recommended, but so the cases might increase. But as of right now, as of July 12th, if you were to extend the lockdowns, nothing's really going to make a difference on it. So that's what's being said. So now coming into this article here says virtually all remaining coronavirus restrictions will be lifted in England as planned from July 19th. So we already have this positive sentiment going into next week, and you guys must have seen like that huge jump in GBP, JPY, or any GBP pairs in general today. And that's from the positive sentiment because of all the investors looking at today, whether or not PM Johnson is actually going to lift the restrictions. So it seems like they are going to do that on July 19th. Legal curbs on social distancing and mask wearing will be replaced by guidelines that simply expect people to be cautious and show restraint while the daily numbers of new infections remains high. So basically what that means is they're saying you don't have to socially distance, you don't have to wear a mask, but we are expecting people to still be cautious. Just because we're lifting the restriction doesn't mean that you just go immediately back to your pre-COVID life, right? COVID is still around. It didn't just go away out of nowhere. So they're still expecting people to wear masks, still socially distance, still show some precautions along the way. And then all businesses, nightclubs will be open with no capacity limits. That's pretty much it. Again, just reiteration of what I just pretty much said right now. They're summarizing everything that we just discussed. But that's pretty much it, what they're saying as of this document, as of this article.
Let's see if they stick to it.
Yeah, let's see if they stick to it. And so there's four major risks, and they kind of talk a little bit more about that in this article too. But the four major risks, I'm just going to go ahead and jump into it instead of going through the entire article, is an increase in hospitalization and deaths related to the Delta variant, related to COVID, more long COVID, which just means new variants coming out, workforce absences, increased risk of new variants emerging, right? So those are the four major risks that are associated with opening up the economy. So when you come back to this article, England faces up to 200 daily COVID deaths when peak hits. They're talking about four major risks after the pandemic restrictions are lifted next week, right? So those are the four major risks. Yeah, so they're pretty much saying the same exact thing, that, you know, don't go back to the pre-pandemic life right away as soon as the legal curbs end. So they're saying that we're definitely going to continue on lifting the restrictions, not prolonging this lockdown, but it's absolutely important that we proceed with caution. And I cannot say this more powerfully enough, that this pandemic is not over. So they're just keep saying it over and over again. We're not going to require you to socially distance. We're not going to require you to wear a mask, but you should do that.
I mean, that's all they could really say, you know?
Yeah. And we're going to see similar things happening in the US too. So if you go back like just the past year or so, especially related to COVID, everything that we have been seeing in England, after a month or so, we see the same exact thing happening in the United States. So when the economies start opening up, businesses all over the place start opening up in the United States, that's exactly what they're going to be doing. COVID isn't gone, but we advise you to wear a mask. We advise you to socially distance.
Exactly.
Even right now, as a lot of the businesses they're opening up, most of them you could just walk in without a mask, right?
Mm-hmm.
But you're still going to see so many people still wearing masks because people still don't feel comfortable, and it's still advised by the government to do so.
What would you say the percentage is over in California right now of people wearing masks compared to not?
I would say it's still like around closer to 50%. I mean, I go out.
50%. Wow. Okay.
I would say closer to it, because wherever I go, whether it's, you know, the Bay Area or a little bit out from the Bay Area, I haven't been to SoCal just yet, but I'm pretty sure there as well. But wherever I go, people still wear a mask, right? It's not like a huge percentage. You don't see every single person wearing a mask, but you see like a large percentage wearing a mask.
Yeah, over here on the East Coast, it feels like it's more like 70-30, I would say.
Still wearing a mask?
People not wearing a mask compared to
Okay.
wearing one.
Yeah. I mean,
And especially outside, there's a very small percentage of people wearing masks outside.
Yeah, I mean, specifically the places where I see them wearing masks is in restaurants or anywhere like you're going indoors. But if you're at a park or you're just walking around, then no, people don't wear a mask. If you're just walking past people. But when you start, you know, going to a restaurant, going to like, you know, Chipotle, whatever it is, or any store, that's where you see people wearing masks still.
Get me hungry with that Chipotle.
And then, yeah, so coming onto the economic calendar side now, there's not much that came out as soon as the markets opened up. So as of right now, it's still pretty relaxed Monday and relaxed Sunday. And then going into Tuesdays where you have CPI coming out during New York session. So this is something that I would be paying more attention to, CPI and core CPI. And then after that, of course, you have the FOMC members speaking. So if you want to still kind of get a gist of where's the economy headed, where's, you know, the Federal Reserve's head basically, then that is something that you can pay attention to as well. But the more important news is going to be CPI. That's going to give you an indication of where's inflation headed, or at least from the consumer's perspective, what do they think about the inflation? And then you have a fundamental heavy pre-London session. So in London session, you do have a French bank holiday. So I do expect towards the end or the middle of the London session, I do expect the volume to die down a little bit. But as soon as the market opens up, I do expect the volume to pick up a bit more based off the CPI news when it comes to GBP. And then you have core CPI, PPI. So you have inflation news coming out from all three perspectives that we pay the most attention to when it comes to economics: the consumer side, the producer side, and the retail side, right? So you're getting the entire picture right at once. So that's something definitely that you want to pay attention to. We're just trying to make sure is majority of the outlook when it comes to inflation a little bit more positive when it comes to the pound, or are we still on that little pessimistic side. And then Wednesday is going to be one of the more fundamental heavy days where you have the producer price index. So on Tuesday, you have CPI coming out, but then on Wednesday, you have PPI coming out, right? So you're seeing inflation from the producer's perspective. And the more important fundamental is Powell testifying as well. So he's due to testify on the semi-annual monetary policy report before the House Financial Services Committee in Washington, D.C. So you definitely want to pay attention to this because he's obviously going to be talking about the economy, what their stance is right now from a monetary policy perspective, and what do they expect to happen, let's say by September, August or September, and then continuation on there from there. So this entire week, basically all we're seeing is a push from market sentiment and a little bit of fundamental side as well. So you're seeing just a market sentiment when it comes to CPI, market sentiment when it comes to the producer's price index, when it comes to Powell speaking. And then like every Thursday, you have unemployment claims. So that is something that you want to be watching out for as well. And he's going to be testifying again on Thursday for the same exact thing, but now before the Senate Banking Committee, right? So you definitely want to pay attention to those two New York sessions out of the entire week and make sure that you're not entering a trade 5 minutes before he's speaking, right? That's going to be a lot of volatility. So don't do that. But if you've already entered a trade before he is speaking, let's say an hour, 2 hours before, by that time, you should be trying to manage your trade, right? Manage your trade, take partials, move to break even, or, go risk free, whatever your risk management strategy is, do that. Or if you're negative at that time, start managing your trade. Price is going to move a lot when he's speaking. And then
Absolutely.
you have Japan's interest rates coming out on Thursday as well. So they haven't given us a time yet. They could come out anytime during Asian session. So this is what you want to pay attention to along with the press conference. For the most part, they're going to keep it at the same, especially with everything that's happening with their vaccines, along with Olympics in Japan. So in Japan, they're still going to have the Olympics, but they're not going to have any spectators. That's still a huge hit from a financial perspective to the Olympics. They're losing millions of dollars when it comes to that because they're not making that money by selling tickets or anything like that to the spectators, right? And then when it comes to vaccines, there's actually cities, like areas in Japan that are now canceling their appointments for vaccines because they don't have enough vaccines for people. So for the most part, I do think they're going to keep the monetary policy rate the same. And then in press conference, that's what you want to watch out for, along with their monetary policy statement. Kind of read up what's their outlook, and then where are they sitting right now from a monetary policy perspective. And then Friday is a little bit of more calm after a hectic 3 days. So you have the core retail sales coming out. So this is another thing that you want to watch out for right when New York opens up. So it seems like this entire week, besides probably Wednesday and Thursday, along with Tuesday pre-London session, you have a pretty relaxed London session. It seems like majority of the news is coming out in the pre-session. And then that's going to get priced in when the market opens up.
Gonna get some action in New York.
Yep, absolutely. Let's get on to the technical side.
Let's do it. All right, guys. So we are going to do a technical breakdown. Keep it simple. I'm just going to show you exactly the way I look at the market, the way, for the most part, I think both of us look at the market. But let's take a look at the monthly over here on GJ. Looking at some key levels over here, obviously 156. Anyone that trades GJ, you all know that this has been a very significant level, and we've been waiting for a price to come up to 156 for a couple months now. So we're going to mark that off. Obviously, we have this significant support right down here that we can mark off after that Brexit tank on the pound that brought price right back down to 128, holding support. Then we came right back up, had a little recovery, and then we came right back down to retest that low down here. Now, this was the little tank from COVID. Pretty interesting that we never closed below that support over here with all the businesses closing down and nobody working, nobody stimulating the economy other than the government. So it's been it's pretty interesting that we never closed below that. It's almost like there's some kind of agenda there that it didn't want to, price didn't want to come all the way down and close below that area. And then we ended up recovering from there. So banks got in at a good time and, brought price right back up to 156. I'm sure we're going to be continuing right back through 156 to retest some of these levels and mirror these moves over to the left. But other than key levels over here, we also have this trend. If you guys have been watching our breakdowns, this is something that I've been pointing out. And another reason why I've been waiting for 156 is this downward trend over here, where price 3 times is kicking into this area over here, and for the 3rd time we're tapping into here. So I knew at some point 155, 156, once we tapped into this area, obviously support resistance being the main confluence, but also having that there, you know, after dragging this over to this area over here, it lined up with 155, 156. So I knew we were gonna line up with that level and probably get some kind of reaction in that level after being so bullish for so many months over here. So now,
there's another thing where the massive wick that you just pointed out, even with businesses, you know, locking down and everything, we still don't close below that area. When you look at it, if you're trying to align fundamentals and market sentiment and technical analysis, this is the perfect example, right? There's a lockdown happening. Economies all across the board are closing down, but what is every economy doing, right? What are the governments doing? What's the central banks doing? They're pumping money into their economy, right? And that's where you see all these sellers getting rejected. You look up US 30, it's the same exact thing. The Fed had literally stopped people from selling their shares, their stocks. They had pumped up the economy. They had pumped up the stock market so much that this is where you see that major rejection, right? And then after that, it's like, okay, well then if there's a major rejection, then for the next 3 months or so, why didn't price just shoot up, right? On the 3rd month, it did shoot up, right? Let me see. I'm gonna just annotate here real quick. But
yeah.
this is where you see like that massive top wick rejection as well. And then after that, we just follow up and then continue this bullish momentum. From a fundamental side, this is where you had the central bank stepping in and pumping up the economies from one way or another. By this time, by the time we were sitting in these areas, this is where we started getting fundamentals about, well, especially in the UK, that businesses, they're not able to afford employees at that time. They were shutting down and all of that. So the government legit, or the central banks and, you know, all these other authorities that stepped in, you know, different authorities for different countries, but they all stepped in. They're like, okay, well, we know businesses are struggling. So here's like a business program to help these businesses, right? Here's an employee program. We're going to pay 80% of the wages, so you don't have to let go of these people, right? And then train them, this and that. This is where you see that volatility happening. This is where you see that little consolidation happening. This is where you see, you know, the market obviously trying to price in COVID, businesses shutting down, people getting a little bit more conservative with their spending, but the government literally stepped in. They were giving money out to people. And that's when people started going out and spending more money. And then once they run out, they sit down and there's another stimulus check that comes for them. And that's where you're seeing all this like bullish push up coming from. It's from that.
Yep, absolutely. And this is a beautiful wick to fill, the one that you just pointed out over here.
Right.
Yeah, ever since we closed and formed that support right over here, from bullish ever since. Yeah, we had some kind of correction right here, but we never broke below that support over here. Coming from just a technical standpoint. But back to where we are up here, 156, we have a strong bearish candle right over here with a wick to fill. We did fill that wick. We actually passed that wick, and we did retest this previous support over here, which we can obviously mark off. So we retested that area, but now we just snapped right back. So we have a weaker bearish candle, and now it looks like we may be closing you know, it's the beginning of the middle of the month, so maybe not. But on the weekly, I'll point out what I'm talking about. But right now, we are reacting to these candle body highs over here to the left, and we're failing to close below that area right now, so far, right? But looking at the weekly now, we can adjust this. We have our support.
I would even extend the zone over to the left from the monthly time frame and down.
Yep, from right over here.
Yeah, and like, you know, just keep going, because we just see how price keeps rejecting this area over and over and over again.
It's been a very strong level over here.
Right.
And if you guys remember, when we were over here, we ended up forming this high up here. We got our video 153. Once we created the high at 153, we came all the way right back down to retest this level right here at 150, 149, 500. but that was the candle body highs, like Sharma just pointed out over here to the left. Multiple wick rejections to the left as well. But we came right back down, held support, and as always with GJ, especially on the lower time frames, once we create that high, we either consolidate, form our support, grab orders, and then continue right back up to retest that high. It's exactly what we got. Are we going to get the same thing over here after forming this high? Obviously, we're getting some bearish pressure over here from these levels. This is a very key level right here that we were just pointing out. Look at that trend line over here and 156. So are we going to form and hold support right over here? Wrong tool. Always. We have multiple wick rejections in this area as well, but 152 has been a strong support on GJ, as well as a resistance or rejection area to the left as well. We had that little fake out over here, but we created the high and then we retested the high. But right now, we're specifically looking at these candles right now. We're rejecting this area. This candle pushed down past the low of this wick as well, but ended up flipping bullish. So are we going to hold some kind of a support in this area to continue right back up? Or are we going to come right back down to fill this wick? Really depends on, honestly, the 19th, if they actually open everything up or if they delay it, as they always do.
And leading up to the 19th, we're mostly just going to be trading market sentiment. What's the sentiment of investors? What's the sentiment of consumers? What's the sentiment of, all the big players in the market?
Exactly. So looking at the daily over here, we have a little bit of a fake out, right? We got that support over here, 152. Price ended up closing below this area, and we corrected the entire move on Friday, right?
Yep.
Hopefully a lot of you guys grabbed this move. I grabbed a piece of it, didn't grab the whole thing because it was Friday. I was good for the week. I had a great week last week, so I was done. I was a couple guys in the group actually caught this, I'm sure. Did you catch this?
I did. I caught it. It was about 150 pips.
Beautiful move. So we ended up right over here doing that fake out, closing right up here, and we ended up closing with no top wick on this candle. When I woke up this morning, this candle ended up, creating a top wick up here and then flipping bearish to continue right back down to maybe form a bottom wick. Now we're bullish again. So let's see what ended up happening in this area. I am looking at, let's see, this is a very key area as well. Right now, we have that resistance right over here, multiple rejections in this area. You could honestly put it right here, and that's what I've had, but also, the fact that we're here, we were holding the support over here. I want to see what price does either tonight or tomorrow in this area if we continue to reject this area or we close above it and continue up. If we do, then I want to see what we do in this area. Are we going to continue
honestly
to
just encompass this entire thing here.
Good.
And the reason specifically why I would do that is because if you look to the left, you have this entire consolidation, right? And then you look to the left, we've seen price kind of just dip into this area, finally create that support and then push back up, right? And that's the same exact area that we're coming up to. Plus you have this bearish structure that's forming, just coming down from, this part right here. You got your highs, you got your lows being formed, you got your entire consolidation area. All we're doing is just creating lower lows and lower highs. So really, we don't have a break of this short-term bearish structure unless price can break above this zone and continue bullish from there.
Exactly. Yep. So again, like I said, if we break above that level, that'd be significant. But if we break above this level, like Sharma was just pointing out, are we going to mirror this move over here to the left? Looking at the 4-hour right now, the 4-hour. See, I hate when it's all messy like that.
Yeah.
So no, it's not you. Okay, so we have this previous rejection, this resistance right over here where we tapped it for a second time. So order block over here, we ended up just dropping. That was, what was that, Thursday? And then Friday we had that correction the day after. So this morning we ended up forming this support right over here. So right now we have this low created. We create this high up here, past the high over here to the left, created a new high, and then we ended up coming down, creating the support. This candle right over here, we're gonna study some of these candles over here candle closed with no bottom wick. This candle ended up passing the low. I actually grabbed this bottom wick and, you know, ended up stopping my runner out at break even, just grabbing like 10 pips. But this candle ended up forming that support, little doji candle. This candle passed the high. We had a massive move after the pre-New York session this morning around 9 o'clock. So this candle ended up just having a massive move. A couple of the guys in the group caught this. But right now we have this resistance. Previous rejection area to the left, and now we closed above it. Right now, this candle right now is holding the support to maybe continue right back up to retest these highs at 153.800. So let's see what we're looking at on the 1 hour. 1 hour is ranging over here, and I wouldn't want to catch anything or trade anything. We could remove this. Maybe make like a horizontal line at 153.100, because you have these two wick rejections over here to the left, and then these wick rejections to the left as well. So right now we had kind of like a fake out. This candle, I don't want to take anything on GJ right now until we break and close above this area. If you extend this to the left over here, you'll have a nice clean move right back up to this area for about, got about 20 pips in here to catch a nice little scalp. But if we do close above this area, we should be continuing right back up to 153.900 and eventually maybe tap this area at 154. But right now, I don't want to touch anything until we close above this level right here after forming this support and kind of faking out a little bit over here to the left, right? So fake out, are we continuing right back up to retest these highs and close above this area? Or you could possibly, if we do end up closing below this support right here, you got a nice clean move to the left that you can catch something either tonight or tomorrow.
A lot of it is just going to be just waiting on the trades, being patient with it, giving it some time. It's because when you drop up or you pump up to the 4-hour time frame or the daily time frame, we're clearly sitting at like some volatile areas, right? Some liquidity areas. So you're obviously going to see consolidation forming in those areas. You're obviously going to see price trying to figure out its way, where we headed. And a lot of that support is going to come from fundamentals, specifically in this area that we're sitting in, because like Stefano's pointed out, we have to correct this entire push down that's happened here from higher time frames, right? In the last week. You have to correct that. The only way that the market again collects orders is retracements or consolidation. So clearly we're pushing back up, creating support. Also take a look at where exactly are these wick rejections happening. It's coming back into these previous support areas, right? If you clear that out, then you have that 20 pip range that you just identified. But right after that, you want to kind of make sure you're getting your confirmations before getting into a trade as soon as price taps into this area. Best case scenario, you have an entry here and you have runners going up to this level, risk-free. After your 20 pips, go risk-free and all of that. And then you can look for scaling opportunities. So a lot of this has to do with patience. We did a couple of simulation sessions that we have posted on both of our channels where we had to wait, skipping through hourly candles, 4-hour candles. We have to wait, and that's how it is. So wait for your confirmations. You're in liquidity areas right now. So give price that room to kind of, make its way, whichever way that it wants to go. Don't try to choke your trades, or don't try to just jump into a trade without confirmations.
Exactly. And this is, you got order blocks over here to the left. This is very difficult. Some of these, I'm sure many of you guys don't trade these setups. If you trade strictly technicals, or let's say 80% technicals, 20% fundamentals, a lot of these, it's very hard to be trading in this and trying to figure out what you're going to do, because this is the 4-hour, and we're just all over the place over here, right? You have not much confirmation of where price is going to go. You're printing lower lows, lower highs, and a higher low and a higher high out of nowhere. Price you just need to wait for price to kind of exit this area or some of these areas over here before you can catch like a confident trade or something that you truly believe in, or something that you've seen in the past. Right now, I mean, like with this trade this morning, I'll break it down for you real quick. This is my setup, right? We had this order block up here to the left. kind of consolidating over here to the left. You have this bearish move over here to the left. We ended up holding this resistance here. But the only reason I traded this was because it was my setup on the lower time frames. And I knew I was only going to maybe squeeze 10 pips out of this before I had my zone over here. But you had this resistance being held. Price closed below this previous resistance. So we ended up respecting it with this wick and this wick right over here as well. This candle ended up closing. What is this, a 30-minute? So on the 15-minute, let's say you didn't, oh, sorry. You didn't have any of this happening, right? You had a clean move to the left. You had this support formed. And with this candle ended up closing above this resistance, I thought it was going to close below. And if it did, I would have entered right there. But since it closed right back into this range, that's why I didn't enter. I waited for the next candle to create a top wick and then pass the low of this candle right here. And that's exactly what we got. So I ended up entering right here with my stop loss above that wick. Price ended up dropping about 10 pips. I closed 50% 3 times at 10. Stop loss at break even, ended up getting stopped out. But I knew after that I really didn't have anything. I took it like a 1% sell over here based on the 1 hour. Just breaking down my trades right now, but it's gonna help you guys understand that like there's not much in here for you to scalp, right? That was the only thing I really saw this morning. But what I did get was this 1 hour formation. It was pretty interesting to me how we kept rejecting this area, and we had a wick that we could possibly fill after this candle created a top wick and then passed the low of that candle. I just entered a 1%, managed risk very well, didn't lose much on it. But like I said, the whole point of it was there wasn't much to catch in here. You know, there wasn't much entry here, maybe on the 30-minute, but other than that, on this candle, as we pass the high, putting your stop loss right here with some high volume around 9:30, as you guys know with GJ, get some nice volume around that time. But other than that, there's not much in here. It's after this happened, after this massive move, look at this. Just continue to consolidate over here. There's not much. So you just want to be smart in the market and make sure that you're just trading your setups and being smart when the higher time frames are consolidating the way they are over here. So moving over to gold real quick. As you guys know, we've been in a massive bullish trend over here. Just gonna adjust this real quick. Just tapping this area multiple times in this bullish trend. Obviously, a lot went on 2018, 2017 with Trump being in office. Geopolitical pressures, Iran, COVID, right, pushed us to historical highs, and then we had our correction. We can draw that right over here. I'd rather draw it on a weekly, but we have that correction, and all of a sudden we had all those inflation pressures or the market sentiment when it comes to inflation coming, and also the geopolitical pressures with Israel and Gaza, all that happening. And then we had the interest rate talks, which basically dropped GJ over here. So the Fed appeared to be dovish at the time. Let's see what they're, or hawkish at the time. Let's see what they're going to be saying tomorrow, or not tomorrow, but what, Wednesday?
Wednesday and Thursday. Yeah.
Okay, we have an FOMC speaker talking tomorrow, but he's basically just going to be echoing everything that Powell's talking about. But anyway, we pointed out every time, very similar price action over here as we create this high corrective market, retest the previous lows over here created. We come right back up to these areas, so these candle bodies to the left, and then we just drop with the market recovery.
It seems like that's where we're sitting at right now.
Exactly. Somewhere in here, right?
I think we're sitting like somewhere around this area here, because even if
these candle bodies.
Yeah, because if you just draw, you know, how we have, you know, our little structure being formed, and then price kind of broke out of it, but same exact thing. It just tapped into the same key levels, and that's what we're doing right now. But in our case, the key level is 1900. So if you go back to the right, our level is 1900. That price keeps tapping into, which is like somewhere up top here.
Yep. 1900, 1910 on the lower time frames has been a pretty significant level.
Yep.
But let's see. So we have that level right up here that price tapped into around 1910 to 1920, anywhere in this area over here. We ended up retesting these previous candle highs and then just dropping with Powell saying what he was saying. So
this entire thing right here.
exactly.
Yep.
Extend this to the left. Got multiple wick rejections over here, and we ended up holding this support, previous support as well. This was a high consolidation area to the left. We were in the same exact thing over here to the left, and we ended up breaking above. Right now, in the lower time frames, we're consolidating, but it looks like this candle already formed its bottom wick, and now it's trying to flip bullish over here to maybe fill this wick and kind of correct this move over here. Now, Sharma, fundamentally, what would have to happen for that to happen?
In order for gold to push up, we would need GBP, for example, going into next week, maybe that's what we're waiting for, to open up, right? And then have a little bit of more optimism. You have Powell speaking, so we could also have optimism from there. So we need a lot more optimism from the fundamental side, economies opening up, and then investor confidence boosting, consumer confidence boosting, and all of that. That, you know, if things were to open up now, we possibly don't have to go back into another lockdown. We possibly don't have to impose more restrictions, but even the central banks across the board, England, US, even let's say Japan, or, you know, whatever, Europe, they're all bringing in some more optimism for their economy. So that's what we need to see in order to break out of this consolidation area here.
Absolutely. And also, technically now, if you look over here to the left, we have this previous support that price is struggling to break above. We keep rejecting that area over here with these wicks. And if you look at this, it doesn't, you know, we don't even have to drop down to the lower time frames to know that this is just consolidating over here. We can adjust it over here. So you have this consolidation. I think the banks, everybody's really just waiting on Powell to say what he wants to say about the economy, if he's going to raise interest rates, or if he's sticking to what he said a month or two ago about raising interest rates 3 times within the next year and a half, 2 years. So is he going to stick to those remarks, or does he need to see more for the economy to open back up? And if that's the case, then
they said 3, and then they bumped it down to, okay, maybe we'll only have 1, and then now you're sitting at this uncertain level of, you know, we don't know just yet. But in order for them to increase the interest rate, the first thing they need to do is scale back on the assistance that they've been providing.
Yep. Exactly.
Another thing with gold, sorry to cut you off. Another thing with gold recently has been the fundamentals related to oil because of OPEC. So with OPEC, they haven't been able to come to an agreement where majority of the countries, they're saying that, well, things are starting to open up now. Everything needs oil, right? We are trying to move towards, you know, clean energy and things like that, but global economy is just not prepared to do that 100% right now. So obviously oil is still needed in a lot of the production and just to keep the economy running. So that's what the sentiment for majority of the countries have been, but there are a few countries that are saying, no, we don't think like we're going to increase the supply of oil. So now you have that basic supply and demand where the demand is obviously increasing, but you have little supply, so the prices are increasing. And so in the past couple of weeks, that's where we saw the volatility from gold coming in because of oil as well, where OPEC, in one of the OPEC meetings, they legit just got up and left because no one could come to an agreement.
Black gold. You know, the whole world or global economy runs on oil. You know, so it's super important. As far as the lower time frames on gold, guys, don't touch this. It's not worth it. I know you guys get excited. You want to trade. You know, you put in a lot of work over the weekend, and you're excited to jump in a trade, make some money, and catch some pips. But gold is your main pair. You need to have another pair in your back pocket that you know pretty well. You've studied the last 3 to 6 months of price action and the way that pair moves. Trade that pair because it's better than trading this or trying to jump into this. Wait for price to break out of this, because once you do, once we break out of the resistance of this, you got a nice clean move to the left that you can capitalize on. Right? But like Sharma was saying, breaking down some of those fundamentals, wait for some of those things to happen for price to break out of this consolidation. And honestly, you don't really want to be trading in this either. Might want to wait for price to break out of 1760, which has been a pretty significant level on gold before you take this.
Yeah. And
Right?
if you ever get confused looking at, any sort of trades or anything like that, you don't know what the market's doing, look at simple structure. That's all we're really breaking down for you guys here. Simple structure, support, resistance, right? You don't see us putting like indicators, fibs, if it does this, that, whatever. It's simple, market structure and then support resistance, and then apply your strategy on top of this if you want extra confirmation.
Absolutely. And one more quick point, that trend line I was pointing out to you guys before, tapping multiple times, we came right back down to kind of tap it right over here after creating this high. So could we be coming right back up, or maybe consolidating right now to then continue right back up to retest these highs? Again, a lot has to do with fundamentals when it comes to gold for something like that to happen.
Look at this entire area. You've seen this area being liquidity generation area. You've seen consolidation here. Go back, take a look at what fundamentals came out in order for price to break out of this area, or even to the downside here, or even here. So we've seen the same exact consolidation in these areas over and over again. All you have to do is be patient. That's the hardest part in trading, being patient and then waiting for your setups.
The more experience you get, though, the easier that patience gets.
Absolutely.
It gets a lot easier for you to sit on your hands.
Yeah, so
Hope you guys got a lot out of it.
Absolutely. So that's the weekly outlook. Again, the way to really take advantage of this is look at what we're providing you here and then also do your own analysis, try to understand what's happening at each level and then go from there, right? So these are the opportunities that are coming up in the markets. These are things that you can definitely take advantage of. This is the same exact thing that my team and I will be looking at. It's the same exact thing that probably Stefanos, you're going to be looking at. So, even this weekly outlook, I personally, after I upload it onto YouTube, I send it out to my group as well. So there's really nothing different. You're being exposed to the same exact opportunities that we will be taking throughout the week.
Yeah, I did basically the same exact breakdown for my team this morning when we traded. So, you're not getting anything different from that other than being in the community.
Yeah, absolutely. Well, other than that, everyone trade safe. Again, wait for your confirmations. If price is coming up to another consolidation area, resistance area, wait for it to be clearly broken, right? No one ever, hardly anyone ever catches a trade right on the tip, right? So wait for that confirmation and then also practice proper risk management strategies. That's what's really going to help you elevate in your trading and grow your account.
Absolutely. And back to that economic calendar, guys, we got a lot of data coming out this week, and I know it gets exciting for you to trade some of these events, but a strict rule that I stick by that'll help you guys out: don't trade the actual data coming out, trade the reaction to it. So wait about 10, 15 minutes for this stuff to come out, see how the market reacts to it, and then you can place your trade if you get your setup. It's that simple. Don't jump in. That's just gambling. You have no idea what's going to happen. Spreads are high. You're just jumping in. It's an emotional decision. Stay out. Wait for the reaction to the market. Wait for the reaction to the data coming out, and then trade accordingly.
Absolutely. That's the same exact thing that I tell, my people too. Give it 10, 15 minutes. You have 15 minutes before the news comes out. You have the fundamental traders and the market sentiment traders who are trading based off the previous versus forecast. When the actual comes out, obviously they have to adjust their trades accordingly. It takes them the same amount of time that it takes you to go to your MetaTrader and change your positions, right? Take partials and things like that. So give them a little bit of time too. Let price make bottom wick, top wick rejections, and then look for your trade opportunities. So don't try to trade the actual news, trade the reaction to the news. You said it perfectly, Stefanos.
Amen.
All right. Have a great rest of the week, everyone. And then also trade safe.